Good evening. 101st Amendment has introduced GST in India. GST stands for Goods and Services Tax, and that GST came into force on July 1st, 2017. And before that, there were so many discussions between central government and various state governments with respect to the introduction of a GST, so that there was an apprehension, there was a fear among so many states that if GST is introduced, that is going to be a huge revenue loss for the states. In order to take out the fear of the states, central government agreed that a law will be passed. Accordingly, whatever the loss that is going to be incurred by each state will be taken care by the central government for 5 years, meaning starting from July 1st, 2017 onwards, that will be 5 years, and that is going to come to an end by June 30th, 2022, which is very near. And if you look at the collections of the GST, that is increasing very rapidly. But with respect to certain states, there is an increase, and with respect to some states, there is a decrease. That is the reason why currently GST Council, GST Council, which is headed by the Finance Minister of India, where all the state finance ministers are also the members. Now the GST Council is mulling regarding how to increase the revenue through GST. There is no doubt that GST collections are increasing very rapidly, but the government needs more money, because especially as the dead end, the date is coming up, that is June 30th, 2022, the compensation that is paid by the central government to the states will come to an end. But what about the states later? Now the mechanism has to increase the GST collection. But how do you do this? Currently, if you look at the GST regime, there are four slabs. Yes, there are four slabs: 5%, 12%, 18%, and 28%. Please listen to me carefully. Currently, you have 5%, 12%, 18%, and 28% with respect to various goods and services. And some goods and services are exempted from this particular regime. Now, in order to increase the revenue, GST Council is thinking to reduce number of slabs from 4 to 3. So 4 to 3 it is going to be decreased. But how do you increase the revenue by reducing the number of slabs? That I am going to explain to you now. Apart from this one, the GST Council is planning to include the exempted items in the slabs. So some goods and services are exempted from GST, and that list will be reduced, meaning some will be taken up and they will be put under one of these slabs. So this is one thing, government is raising the revenue. Now the point is that how come reduction of these 4 slabs to 3 slabs will increase the revenue to the government? Here what is going to happen? You have 5%, 12%, 18 and 28%. Now government wants to reduce this to just 3. It is going to be 8%, 18% and 28%. Meaning all goods and services that are under 5%, that is going to be increased to 8%. So obviously wherever you are paying 5%, that is you are going to pay 8% now. That will increase revenue to the government. Point number 1. Number 2, exempted. The exempted goods and services, some will be brought under 8%. So what you are getting 0 earlier, now you are going to get 8% for this. So the revenue will increase. And another important thing is that wherever you have 12%, that 12% is going to be included in 18%. So wherever you are paying 12% now, that is going to be increased by 6%. That will become 18%. That is going to bring huge revenues to the government. So this is how the government is planning. Very soon, maybe end of March 2022 or April, beginning of April 2022, GST Council is going to meet again, and probably on that particular meeting they are going to decide, and the number of slabs will be reduced from 4 to 3. Fine. So this is one very important development with respect to GST, and maybe central government, maybe state government, always they want to enhance their revenue because of the increased expenditure for various purposes at the central and state levels. Thank you so much, and I'll see you in the next session.